I hope so too, Val. We've had bees in the house, squirrels in the house, all sorts of things in the house. Homeownership is a joy, right?
It is. It's so much fun.
So welcome, everybody. It's a pleasure to have you here. Just over noontime. I am Nicole Kittredge. I'm a mortgage professional with many years experience, talking about a very hot topic. I'm sure you've seen articles about it, other presentations. So I'm going to fly through mortgage rate buydowns today. Forgive my voice. My darling children have shared with me a cold or something they have, but it's not too bad. Hopefully you'll be able to hear me clearly. If you have questions throughout, by all means, throw up a hand in the chat, unmute yourself and ask. Participation is certainly welcome. So the first slide here, you can see it says a temporary buydown may keep home buying within your budget. So as prices rose like crazy, buyers really had to do things that real estate agents, professionals like myself, don't love them to do, like waive inspections, go way over asking. Now the market shifted where maybe they have more opportunity to get a house and not have to pay full price or way over asking. They may not have as much competition, but they are facing rising interest rates. So a buy down is a great opportunity. I'm gonna go to the next slide and we'll jump right into, oops. We will jump right into what a buy down is. So it's a feature that reduces the interest rate for a fixed period of time. The buy downs are on a purchase transaction only, and the fee that is paid by a seller is called a buy down fee. This is definitely a negotiation, and we'll talk a little bit more about this. It is widely available through Envoy through a variety of loan options we have, from conventional to government, which is FHA, VA, and USDA, and even conventional high balance. For the next slide, I think this is an important one because how does it benefit buyers? The first bullet that's highlighted is it can save money on the monthly repayment. So this is how a buy down can make home buying get back within budget. And just some interesting statistics here. So 54% of home buyers think that they can't afford to buy a home. And I don't know if you've all seen, but along with interest rates, rent has gone through the roof. So really, if someone's willing to be flexible, and maybe even if you get a starter condo, you may have comparable mortgage payments to what your rent is these days. So it's certainly worth pursuing. 25% don't know where to start. So the internet is definitely a place where a lot of people start. I have many videos posted on my YouTube about first-time buying, Credit 101, which Adam Briggs, I see you've joined us today. We did a great presentation on Credit 101. Excuse me. Feel free to send clients my way that just have questions and don't know where to begin. Sometimes I get people on a plan of action, even though they're a year out from thinking about buying. 32% or 29% think it's difficult to qualify for a mortgage, and 32% think their credit score is too low. So believe it or not, there's low down payment and low credit score options. There's no credit score options. There's no down payment options. There's a lot of options out there. And when you partner with buy downs, it really can make home buying affordable. And the biggest one, I think, is 39% think they need 20% to buy a home. That's such a pet peeve of mine. I see articles about this all the time and they're flat out wrong. The average down payment for a first-time buyer is about 6%. So when you see articles out there, comment on them and be like, this is actually not true. You do not need 20% down to buy a home. Okay, how can a buy down benefit sellers? Hold on a second, I'm just trying to see if I can move my screen. So as a listing agent these days, I don't know if you've experienced this, but a home goes on the market and it sits. We're not used to that. You're not having multiple parties through, you're not getting multiple offers right away. So it's kind of a reason these are popping up. We have to shift gears and think about, okay, how can we make a home more attractive to buyers? So a seller credit can be offered to help to cover a buyer's closing costs, escrows, and prepaid items for a temporary buy down, which we'll go into detail on coming in the following slides, or a permanent buy down, which is paying points. We'll talk about that as well. So 1 point is equal to 1% of the loan amount. If it's a $300,000 mortgage, 1 point is $3,000. And how much does that get a buyer? It really depends on a variety of factors, but it can reduce their interest rate. It can be applied potentially to a 1-0 buy down, which we'll talk about. But it's a seller credit is basically a way to help your listing stand out from the competition. So some things to think about is it is important to know that a seller concession, which is another way of saying seller credit, is a negotiation. So if there's multiple offers and you're the buyer and you've requested a seller credit towards a temporary buy down or points or closing costs, if there's another buyer without a request for a seller credit, your offer may not appear as competitive. For the listings, we've talked about this, and probably one of the biggest things is stand out from the competition by offering a seller credit. The appraisal. So the appraisal has to come in at the purchase price. When there's a seller credit, if the appraisal was to come in low, which knock on wood, we're not seeing issues yet, sometimes the first thing to go is a seller credit. And what happens if right now someone locks in, they pay 7% interest rate, they have a temporary buy down, and within 6 months, rates go back down to 5%. That would actually be worth refinancing, especially if someone's going to stay there for the long run. That money would not be lost. It gets held in what's called a buy down subsidy account, which I'm switching to the next slide here. A temporary buy down agreement is signed at closing. Let me go back. No, I don't have it there. It must be in an upcoming slide, but it gets held in escrow basically. So if a loan is paid off, it basically just goes right to reduce the payoff. So the funds are not lost by any means. So the overview, the max you can do a buy down is 3 years. And down at the bottom, it says seller credit limits or interested party contributions. There's a certain percentage that you're allowed to get back from the seller, depending upon the loan program. And we usually never even get close to touching those max percentages. If someone is, they may not be getting the best deal. And in this market, really any market, it's unfortunate, but I have clients that shop, they send me the quote they got, and the closing costs are absolutely astronomical. I'm talking multiple points. I saw one recently, like $20,000 in closing costs. If people don't know, they don't know. So really what we can do is let our clients know when they're shopping to make sure they're understanding the points, the different in closing costs, and getting that second opinion. I'm happy to run over someone's paperwork, even if they're not working with me, to see if it's a good deal or not. Does that make sense? Perfect. Okay. Comparison between a buy down and a traditional point. So with a buy down, it's really beneficial for someone staying in a loan for a short period of time because it's going to reduce the payment for the period of the buy down. With a permanent buy down or a point, that is going to help the client save money over the life of the mortgage. So buy downs are a hot topic now. It's why I'm doing and recording this webinar, but they're not something that are going to be widely used in the marketplace. Sometimes it makes sense if you're going to allocate the funds to just do it to a point and permanently buy down the applicant's rate and payment for the life of the mortgage. 3-2-1 buy down. So let's assume someone says, I'd like to make an offer on a property. Great, they get it accepted. I'm working with them on financing. They're like, we know for a fact I'm in this position for 2 years and then I'm moving. So they'd like to maximize. Why would they want to do a temporary over permanent? Because you get a huge rate reduction. So in this example, I think this is a great way to kind of compare it with why it's better to do the short term versus long term. Is their rate 6.75, but with a 3-2-1 buy down, they can get it as low as 4.75, which would be hard to do on a 30-year fixed rate program. So I won't go over these slides in detail because I have a 3-2-1 on this slide. The next one is a 2-1, and then I have a 1-0. And I'd love to give you the opportunity to review these slides yourself. I love mortgage and numbers, but I know it can be a little boring for others. But essentially, you'll notice the way it's calculated is the payment at 4.75%, and it has the savings monthly and annually. The payment at 5.75%, because there's a max increase of 1% per year, and the annual savings, and then back to the note rate. So in this case, did I go back a slide? Let me go back to the 3-2-1. In this case, The savings is $8,160 when you apply those 3 years of the buy downs. And that's the cost to the seller for doing the 3-2-1 buy down. Does that make sense? I know I went a little fast and I accidentally went to the 2-1 slide. No? Oop. Would you like to unmute and ask Val?
All right, so I'm a little confused on what it's costing the seller.
Yes, so the buy down fee, the seller's cost is $8,160 on this particular slide. So it's basically the savings is what the buyer's paying and the seller's paying. We take those seller funds at closing, put it into an escrow account, and it's used to offset the savings to get the full payment to the servicer. So it's like a fully amortized loan. So the way
Okay, is that number based on the loan amount or the
Yes.
purchase price amount?
So it's on the loan amount. So in this case, the loan amount's 180,000. The loan term's 30 years. The note rate is 6.75. So if they have no buy down at all, their every payment would be based on 675. And the fully amortizing payment would be 1,167. With the 3-2-1 buy down on year one, they're paying 3.75%. So this is the example that they really could never get 3.75% now, right? So they're saving $334 a month with that and $4,000 the first year. The second year, it's going to go up 1% to 4.75%. They're going to save $229 a month, which is $1,400 a year. Year three, 575, 117 a month, $1,400 savings. When you add up all the savings, it totals $8,160. And that's the exact cost of the buy down subsidy that the seller will pay.
Okay.
Yes.
Does the seller always have to pay that?
Right now, it's only a seller paid option.
Okay.
Yes.
So it's
As
the-
program,
So on a higher loan amount, that number is going to be higher on a higher loan amount. I
absolutely,
mean,
we
most
do
loans,
offer it on the high balance and the super conforming loan.
most loans are higher than 180.
Yes. Let me scroll to the next page. This example was a loan of 250, and this example was a loan of 200. So we are headquartered in Texas. Across the country, loan prices and home prices are not quite as high as here in the Northeast. But I could very easily run this for you. If you have a particular seller in a listing, send it over to me. And I could certainly give an example. Now it's going to depend upon the buyer, and we'll slide right over to this slide.
Right.
What loan should a buyer secure? It really depends on a wide variety of options, or wide variety of statistics, really. Credit score, income, even property type. We do offer all of these loan programs. So when I do examples, it is assuming usually a conventional loan, decent credit score. And with each buyer, though, you have to really look at the day and the time they're going to lock to get an accurate estimate to tell the seller, okay, the buy down for this seller for this, whether they do a 3-2-1, a 2-1, or a 1-0 is going to be X dollars. It's kind of like going, Val, what's that single family on the corner of 3 Main Street going to sell for? You're like, whoa, I need to know how many bedrooms, how many square feet? Does it have a garage? Is there a fireplace? It's not a one size fits all price. So I skipped this slide a little bit because I mentioned a seller credit can go towards closing costs. I like to just do a quick overview that with closing costs, that's something a lot of clients don't really understand what they are. So closing costs are related to lender fees and attorney fees. There's also the escrow portion of buying a home where you're going to set up a little buffer, kind of think of it as a savings account that's used to manage property taxes and home insurance. There's prepaid, so you pay your home insurance up front. Those all can be covered by a seller credit. So when, as a listing agent, when presenting to a seller who maybe is like, wow, I didn't expect to put my home on the market and have no offers right away, there's not only the temporary buy downs, but there's closing cost credits and permanent buy downs or points you can contribute towards the buyer, which can all be beneficial to a buyer. So many different loan options. That's my job and what I love to do. It's great when we compare, maybe someone got a pre-approval and we're able to slide them into a new program that saves them a lot of money. I definitely see this with Fannie Mae Home Ready and Home Possible. It really saves a substantial amount. So it's important that clients are being offered all the programs out there. I had one review a while ago and I loved it. It was from a realtor I work with. I haven't talked to her in a while, actually. I should reach out to her. And she said, I know for a fact no other mortgage person will go through all the work you did to get them this particular loan program. It was a few years ago, it was mass housing, but we at Envoy do the right thing. So today was short and sweet. I do certainly have for y'all a home buyer booklet or a real estate agent booklet with some more data. Would you like me to send you one? I will. Feel free to reach out to me if you'd like a copy of the presentation. That's really a quick overview of the buy down. And, you know, I think when you see that it may not be the best option unless someone's going to be there for the short term, I think that's important to know. This isn't a one size fits all magic bullet, but it's another tool in our toolbox that can make the difference of getting a person into a property. When we talk about it, then we can also talk about seller credits and the points and other ways to help home buyers find buying a home in this market a little more affordable. Any questions or feedback?
Oh, this is awesome. Thank you.
Yeah, I learned something. That's why I logged in.
Thanks, Ed. I'm so glad to hear that. Well, I hope you all have a great afternoon. Again, sorry for my voice. I feel like we did good. I still have it.
You did awesome.
So win. Everyone use
Thank you.
lots of hand washing this winter. All right. Have a great day.
Absolutely.
Take
Thanks.
care.
You
Thanks,
too.
sweetie.
Thank you.
Bye-bye.
Bye.